options. Before giving you the option buying Bank Nifty setup, I assume majority of you already have a knowledge in options, but some people might not know the option, So a small basic introduction is needed at this stage. So let me start first with a derivative. What is mean by derivative? Before learning the option, where the option, this terminology came in the trading, you have to understand derivative. What is derivative? Derivative is a financial instrument. What is mean by financial instrument? I will tell you. Financial instrument is anything that you can bet. For example, there is a cricket match or football match is going on and you can bet on that, like this particular team might win. This is also called a financial instrument. Why? Because you can make some money from that. Okay. So similarly, derivatives are also financial instrument which derive its value from some underlying asset, from a different asset, like its value depend on something else. For example, we all know the petrol prices are very very high right now. Okay, so petrol prices is high. Why? Because the crude oil prices are very very high. So petrol prices are derived from crude oil, right? So when the crude oil prices are increasing, it will simply impact the petrol prices and it will also increase. It is directly proportional. Okay, so derivative is something which derive its value from an underlying asset, like petrol derive its value from crude oil. Crude oil is an underlying asset for petrol and kerosene. Okay, so this is what the definition of derivative is. In the stock market we have two types of derivative, future and option. Obviously there are other types as well, but with respect to stock market we have two types of derivative. First is future, second is options. So I'm not concerned about future at this point, I'm concerned about the option. Okay, so option is also a type of derivative whose value is derived from a some underlying asset. For example, if I talk about bank nifty options, so bank nifty options values are derived from bank nifty index. Okay, bank nifty spot chart or bank nifty index. Okay, so let me give you why we need option. Okay, before jumping in, because we just understood there are two types. Okay, derivatives, one is future, one is option. But why you need option? Let me give you a introduction why you need option. For example, there is a company called ITC. Okay, and one share is 346 rupee. It could be dollar, it could be based on your currency. Just translate that value. So let's say 346 is a Indian rupee. Okay, rupee is a the currency used in India. Similarly, dollar we have, like in USA, like different country have their own currencies. Don't talk, we are not major concerned about. Uh, the point of concern is not currency. The point is here you have to understand the concept over here. So here you see the ITC, let's say, is a company whose one share costs 346 rupees right now. So if you want 3,200 share to be bought, right, you have to pay 11 lakh rupees. Means 3,200 multiplied by 346, it will come somewhere 11 lakhs, right? You have to pay this much amount to get these shares right now in the market. Similarly, in the future, right, you only have future contract, you only have to pay 20% of the cash. Okay, means if 11 lakh, then you have to pay approx 2.5 lakhs to get the same number of shares. But in option, the leverage is drastically decreased and you have to pay 1 to 1.5 lakhs, right? It's very very low, very very low for all. Okay, so why people what is the difference between this cash market, future market, and option market? Cash market will give you the unlimited holding period. If you are buying a stock on cash, if you are paying 11 lakh rupees and you are getting 3,200 shares, so you can hold them for lifetime. Lifetime you can hold such shares. If you talk about future, then you have some holding period, depends on contract to contract. Some contract have 1 month holding period, some contract might have 3 month holding period, like in commodities, right? So here you can only hold from a certain period of time. Okay, and option also have a period, like some options expire weekly, some option expire monthly, right? So what is the difference in one thing we are pretty much sure, cash give you unlimited time period to hold, but these two will not give you unlimited time period. For example, you bought 3,200 shares by paying 2.5 lakhs. Let's say at the end of the contract, at the end of the month, let's say it's a monthly contract, at the end of the month, this 3,200 share you bought at 346 rupees, it reached to 347 rupees, 1 rupees increment in per share. So what amount you will get? You will get your 2.5 lakhs plus 3,200. This is your profit, right? 1 rupee profit per share. Multiply, right? 1 rupee is the profit for one share, and you are having 3,200 shares. So you will get 3,200 extra as a profit. Let's assume the worst case scenario. You bought 346 rupees per share by paying 2.5 lakhs to the broker, and share price reached 345 at the end of the contract. So you lost 1 rupee per share for 3,200 share. So broker will return you 2.5 lakhs minus 3,200 rupees, and I'm not considering the brokerage and other charges. Simple, making the thing simple. So you will receive 2.5 lakhs minus 3,200, but you will receive something, no doubt. You will definitely receive something. But in option, the problem is option becomes zero at the end of the contract. Let's say you bought a contract at 1.5 lakhs. Okay, option price was, let's say option was obviously having a different price, we will come to that later. But let's say your 346 rupees was the price of the ITC share, or that particular share, or it could be Nifty, Bank Nifty, anything, and that got reduced or get increased by 1 or 2 rupees. But if you still holding at the end of the contract, by the end of the contract it will become zero. So option you can't hold long, because it will expire and become zero. Your broker will not return anything for option, right? So that's why option majorly in India, like people prefer Bank Nifty intraday trading. Why? Because if you hold and the target, will not reach within the time, it will become total zero. In future, at least it will not become zero. You will get some amount which you deposited. Here you will not get a single amount even it's possible, right? So option, the recommendations are you do intraday to make money, because you are not worrying about the time decay. You are simple focus on price action, and you will actually make money. Okay, this is one advantage. And disadvantage, this is one disadvantage of option. And advantage is you have to pay less. The same profit which this guy will make by paying 2.5 lakhs, 11 lakh you can make in 1 lakh, or even a 70 to 60,000, right? Because you will get a big leverage in option. This is why people come to the option. So this give you a brief introduction. We had covered there are what is option, what are the uses of option, how option differs from futures, in cash, you know, different types of derivatives. So some basics we understood about options right now. Okay, so we will understand about in the money, at the money, and out of the money in next class, and we'll try to figure out what kind of option you should take in which situation. Okay, so we will explain those things in the next class. Okay, so for this class I just made this introduction to the option. Then we will understand in the money, out of the money. Then we will simply jump into the price action, and we'll try to understand different setups, and we'll make money on it.